How about that? Oh, Christ. Sorry, folks. Sorry about that. A lot going on. The website is down, so I'm dealing with my developer over in Ukraine. I want to try to get him some business before I go elsewhere. So I have him on Skype. All right. So tomorrow is the CPI report. Right. The markets were front running a hot CPI report. I have been of the mind and the opinion, and this could be me getting very cute. Okay, so I am not making a hard and fast call here that CPI won't come in hot, that we can't move lower tomorrow. But I didn't take on any defensive positions today. And I'm going to talk to you why, both technically, I'm going to talk to you why macroeconomically about why I did that. And I may regret it. Admittedly, I may regret it. So we'll spend some time going over the anticipation of the CPI. Then we're going to talk about the price action and where I think we're going after tomorrow's headline. Now, remember, June the 1st, the Federal Reserve was scheduled to begin rolling off debt off of their balance sheet. We're going to talk about the current report that was released after hours. The report runs from Wednesday to Wednesday. The Fed's balance sheet it was released on after the close on Thursday. So we're going to take a look at that, and we're going to talk about. I'll give you my opinions on it. You'll be shocked about what they're doing. Let's say hello to people. Seymour, thank you. Sorry about that. I hate when that happens. I'm sure you do too. CPI report. Yep. Big day tomorrow. Talon, hello, brother. RK, market will rip. Just watch your lips to God's ears. CPI 1 hour before open. Yes, Rick, good afternoon to you, or good evening. Money moving into commodities. Some, yes. Hi, Trish. How you doing? Yeah, we're going to talk, David. We're going to talk about the Dixie a bit. I'm not buying it. I'm not buying it. I admittedly, I took an approach on Nugget NUGT, the leveraged ETF, pretty long on the gold miners. I actually bought a bull call spread going out to August, September. I think maybe September. I wanted to be way out just in case I was wrong. And in the short run, I was wrong. We're going to talk about the ECB and why the dollar ran hot today, along with other reasons. So, Denny, hello, my friend. Louis, hello. Can we look at silver? Yeah, we're going to look at silver. We'll look at Tesla. We're positioned in Tesla. So yeah, we will go over them. Okay, so tomorrow we have, as we all know here, we have the CPI. So we have two important numbers that come out. One is the headline. That's the one the Bloomberg is going to run with, CNBC is going to run with. The one the Federal Reserve pays attention to, wink, wink, I don't think they do. I think it's only when it's convenient for them. The one they pay attention to is the core CPI. So here's the prior read, a rise on the headline of 0.3 again. This is what's going to get reported on CNBC and on Bloomberg. They're expecting a rise. They're expecting a CPI to come out more than twice of the prior read. There's only one problem with that, is that durable goods have been coming in. The supply chain has been opening up. Used car prices, which I'm going to get to in a moment, are rolling over. So the number to watch for me is going to be at the core. What the core is you back out food and energy. And the reason why they have this number is because the Federal Reserve always likes to say that food and energy are transitory, and they like to back it out. So keep an eye on the core and also on the CPI number. They're expecting a big number tomorrow. And if you come in, if you see a miss on the headline and at the core, you're going to see this market rally. Sure as God made green little apples, you're going to see the market rally. But the markets are pricing in a worse than what is expected number. So that's why we saw, partially that's the reason why we saw the markets sell off. So it was asked earlier about the dollar. We're going to go to that in a moment, but I want to talk first about the Federal Reserve's plan. So the plan is to begin rolling off debt off of their balance sheet effective June 1. Okay. Treasuries, 30 billion per month. Mortgage-backed securities, 17.5 billion per month. They increased these numbers to 60 billion and 35 billion respectively. I believe it's in August. So you would imagine with this timetable that when you take a look at the Federal Reserve's balance sheet, wow, Jesus Christ, this is now the second Wednesday of June. Surely, Bob, surely the Federal Reserve's balance sheet has declined at least partially in lockstep with their disciplined approach to fighting inflation. Well, let's take a look. So we have gone up in the month of June. The Federal Reserve's balance sheet is rising. It bottomed out the Wednesday, the final report of May 2022. Since that point in time, you've had June the 1st and you have the June the 9th. Here's June 1. Here's as of, excuse me, it should have been the 8th. The balance sheet has only risen, not declined. So, excuse me, folks, while I take a look at this. A developer over in Ukraine, I got to get him before it's lights out. My website is down, so my apologies. Okay, so he's on that. That's good. So this is where we're at. So if the CPI misses tomorrow, well, what does the market interpret into that? Well, they're looking at the Federal Reserve's balance sheet and they're saying, wait a minute, they're supposed to be rolling off debt, but the balance sheet is growing. And if the CPI number comes in less hot than what is expected, well, the pressure comes off the Federal Reserve to be as aggressive as they've been talking about. So watch for a rally tomorrow only if the CPI misses, meaning comes in less worse than is expected. Now, going back to today's price action, market panics after JP Morgan predicts CPI will come in hotter than expected. White House confirms. The minute the White House confirms anything, I know they're wrong. They have to be wrong because they're morons. And JP Morgan, if they're coming out and they're pounding the table that CPI was going to come in hotter, well, guess what JP Morgan was probably doing today? They were probably buying. So to me, being a contrarian, I'm going on a limb here. We have a bunch of people on, and I'm professing my opinion about tomorrow. It's certainly not fact. It's just in my gut. There's chicanery afoot today, and I think that they're going to have a less worse number tomorrow, and we may just get a rally. Now, if it comes in hot, well then, uh, I got to cover some positions. Okay. Now this is weird. JP Morgan, they come out, and this is as of today. JP Morgan strategist says equities are flashing a bullish signal. So one house is not talking to the other side of the house. Now, they make a couple of good points here in this article. And this is the note from JP Morgan. Lodging prices have ripped through the ceiling. I've been traveling, and lodging prices have gone through the goddamn roof. So no doubt about it. But as I mentioned earlier, used car prices have rolled over. Are they ramping back up again? Maybe, maybe. Or is this a lower high being put in here? Not quite sure yet. But the CPI report, God damn it. Keep in mind, we've been trending lower on CPI, not higher. So, as it says, are we at a peak? Maybe. It all depends upon the influence of natural gas, food, and energy on the headline number. And no doubt it's going to have some sort of an impact. So, that's my story. I'm sticking to it. Why else? Did we see the US dollar rally today? Somebody mentioned that earlier. Uh, I um I I believe that the move in the dollar today was inaccurate. And that's me. I'm being humble. I'm trying to be humble. It's my opinion. I think it was inaccurate. I think that the reason why we've had a stronger US dollar is not because our economy. We're a basket case. We're falling apart at the seams. But so are the Europeans. So is Japan. Except Japan are their net exporters, so is the European Union. But they're all doing funny money chicanery, and just like we are. So the reason why the dollar's been so strong, even though we have trade deficits, budget deficits, trade deficits, is because we've been somewhat hawkish relative to the Europeans, relative to the Japanese in particular. But that began to change today. And the reason why I say that is that the ECB met, they left rates unchanged. They weren't expected to raise rates today. But what they did do, they announced an end to their bond buying process. Was that priced in? Apparently not. Apparently so, because you saw a selling of the euro on the news, and they left open a signaling of a 25 basis point move in July and September, and added that if it's required, to prepare to make larger hikes if necessary. So this is the reason why you saw initially the euro rally, but I'm trying to wrap my head around why the dollar eventually rallied. So I'm going to have to do a little bit more research on this. But I think it was an inaccurate knee-jerk reaction on the part of the Forex traders. And I acted with my wallet. I bought gold stocks because if the dollar rolls over, you're going to see gold go like this. It's only the dollar that is preventing gold ripping up higher. Stock slump, dollar jumps. We already know this. And here's a spot gamma. And this is what kind of hurt me today with our options positions. You have such minor amounts of time value left in your options positions. We're short the options, and you had a bit of a gamma event on the VIX today, and it kind of hurt us on our short options. So how do we respond to it? If we don't get a rally tomorrow, we roll. We roll the positions over out and into July, and we live to play another day. That's all. But I don't plan on booking any losses. Okay, let's talk about this. Trafalgar CEO warns a parabolic blow off top and crude as worst energy crisis just ahead. I have to agree with this because where we're heading on oil prices, here's the weekly chart. And where we're at current is just shy of the peak that we saw just before COVID. Excuse me, not COVID. March of 2022. No, this isn't accurate. Is this chart right? Here, this is what I wanted to go to. Right back here, this is where we're going, up to 147.27. And the reason why we're probably going to break through that resistance level is because just because we get down back to 147.27, remember, this is just before the financial crisis. We've already gone through the peak just before COVID. So the next stop is up here. But the reason why it's probably going to go past it is because adjusted for inflation, even if we hit 147.27 per barrel, well, it's still not all-time highs. We're in the neighborhood, but we're still not at all-time highs. So he's right. And the last time we had a blow off top, which is back in April quarter, then October quarter, July quarter of 2008, we were ripping through the third standard deviation Bollinger Band. We have been doing that of late, and we're back again. I think that we have more to go. There's going to be a blow off top on oil, and watch out for the GDP report that comes out, because the Atlanta Federal Reserve has come out yet again, cut Q2 guidance down to 0.9% GDP growth. Remember, the last quarter was negative. If this quarter comes in negative, we are in official recession. And a blow off top in oil almost always precedes a recession. So this, in all probability, is where we are going on oil, if not breaking out to new all-time highs. Let's just see where we're at with nat gas. Natural gas is a long way to go. I mean, we're just breaking out, literally, of a long-term downtrend channel. So these are some bearish arguments for the GDP decline. Initial jobless claims today came in hotter than expected. The markets usually would rally on that news. They did not. They did not like it. Very surprising. So why else do I think that we're probably going to rally tomorrow, folks? Yield curve. The yield curve is contracting. It is dropping on a monthly time frame. So when you get this yield curve that is pulling back, the pressure on equities is not as great were the yield curve rising. And one of the reasons why you have a yield curve which is pulling back is because of this. We had a very strong 30-year bond auction as buyers emerged. Real buyers, not even the Federal Reserve. Some real buyers wanted our debt. So I don't know who these people are, but apparently there was some demand for our debt. What did that do to the yield curve? Drop like a rock. So as long as this continues to top out and pull back, the pressure comes off of equities and they can move up higher. Do I think we're going to all-time highs? No way. I think that we'll maybe make it up to 4,400 on the S&P 500. Then that's it. Let's take a look at the weekly charts of the 10-year yield. New weekly higher highs. And as I go through these, one trading day left to go. And of all the times I've done this show on a Thursday night and gone over the weekly charts, and I always say one trading day left to go, never has it been more important than this trading day coming up tomorrow. Because what they did today was they literally hammered longs today. There's only one problem. There's no volume. There's literally no volume out there. And I'm going to go over the charts in a moment. So nobody's going to come in and say that it was JP Morgan, it was Goldman Sachs dumping shares today. It was not. There was a buyer's strike. I think what they were doing was whacking out weak longs. So the 10-year yield still looks strong. But if we have buyers coming in for our debt, we have to ask ourselves the question, are we potentially putting in a double top? If the core CPI tomorrow or CPI in general comes in worse than expected, what happens to yields? They go down. What happens to equities? They go up. Now, I'll admit, this is a bit of hopium on my part. Hopium. But it's intuitively what I think is going to happen. TLT weekly chart, 20-year bond ETF. New weekly lower lows. We are off the lows of the week. Daily view. So this chart is a tell, because when you take a look at the daily chart of the TNX, we closed up on the day. We faded a little bit off the highs, but when you get an update on, granted, this is a 10-year yield versus a 20-year treasury. Let's put that out there. They're not always correlated, right? So normally, though, they trade pretty much lockstep, inversely. So normally when you get an up day on the 10-year yield, you get a down day on the TLT. What do we have today? Bullish key reversal bar. My guess is that we're moving up higher on the TLT. So whatever happened to CPI was going to come in hot. If it was going to come in hot, bond buyers apparently didn't buy the message because they were buying bonds today. The tip market, down weak. Not great looking Stokes, not great looking RSI. We're holding support. Volume, anemic. Daily view. Daily chart, not looking great. RSI, meh. Okay. Stokes, maybe a W formation forming here. Price action, not wonderful today. Volume rose versus yesterday's horrible volume, but today's volume wasn't much better. It was well below the moving average. The dollar. I'm of the opinion that the dollar has put in a double top. Prior high, and this is what I meant earlier, before COVID, or around COVID. Prior high, March of 2020. This is when all the fear, all the hot money went into the dollar. before they went into equities. And here we are yet again with a lower high. I think we could rally up to this resistance level, but I think we are going to fail. Why? I think because unlike recent months and years where it's been the United States that's been raising rates, you now have the ECB at least talking about it. Rhetoric matters, words matter. Remember, a lot of what the Federal Reserve does is simply talk. You have inflation that's running over 8.5% per year, and that's the official number. You know it's double the unofficial number. And all they've done is jacked up rates 3/4 of a percentage point in the past year. So a lot of what they do is jawboning. Remember, June the 1st, they were supposed to be rolling off debt off their balance sheet. What do they do so far through the 8th of June? Their balance sheet went up. Don't listen to what they say. Watch what they do. So my guess is that the dollar didn't get the message that the Federal Reserve was in the markets building their balance sheet yet again. And they're not buying into yet the rhetoric out of the ECB that they may in fact have to raise interest rates. If you think inflation is hot here in the United States, over in Europe, it's bananas. Natural gas prices alone through the roof. I have a gentleman who's over in Belgium, and I do coaching sessions with him. And his home heating went from like 100 euros to like 400 euros a month. Crazy, crazy price spikes. So expect the European Union to join in. And the only reason why the dollar's been so strong is because we're the only game in town raising rates and at least talking about it. That came to an end today. The VIX. I got to tell you, looking at this chart, were it Friday afternoon, I would be saying, Mother of God, look out below. But there is one trading day left to go. So on the week, we have a bullish key reversal bar. What's a bullish key reversal bar? We traded lower on the week, only to now be at the highs of the week. This is a very bullish chart. For those of you not familiar with technical analysis, there's a link below to a tutorial I have, 5-part video tutorial, top 5 favorite candlestick patterns. It's free. Click the link below. So it looks as though on a weekly time frame, we are going to break out on the VIX daily chart. Daily chart, what can I say? I mean, I have been warning about RSI threatening a breakout, even though price action has been very, very weak on the VIX. Sure enough, today, monkey hammered. They have broken out. Does it go straight up from here? Usually it does not. Case in point. Let's take a look at the stochastics for a moment. We're going to move them above. Usually, like time's gone by, you can see I'm used to this type of price action with my annotations. Time's gone by, you'll get a pop-up higher, and then you get a pullback. So just because we have this one breakout here doesn't mean we're not going to pull back and put in a W formation. And then if we put in a higher low or we hold lows, I'll be putting on net short positions, no doubt about it. But I think it's a bit too early to go shorting the market. And I could be 1,000% wrong here, but it's just, again, a hunch. The Dow transports. Now, here's where my rhetoric does not match up with the indices at all on a weekly time frame anyway. And I'm going to stand by my old adage that as go the transport, so goes the rest of the market, even though there is somewhat of a delay. So the Dow transports, the past 2 weeks have closed up on the week. This week, we have a bearish reversal bar, and that is not good. So what we did here is we had broken down the week of, technically it was this week here, May the 9th, continuation breakdown, May the 16th, reversal bar, rallied up, try to recapture, rejection. One trading day left to go. But I don't think we're going to recapture the all of the lost real estate this week. So this chart on a weekly time frame is extremely bearish, extremely bearish. Daily chart. Now, the daily chart, you know, here's what I've been talking about with members. It's that, you know, I can't, I don't like buying markets that come off of bottom, go rallying up, and you just expect them to go shooting straight back up to all-time highs. That's not the way it works. It's not the way it works. You got to take your crayon out. You got to wait and see, okay, when we peak out and then we pull back, do we put in a higher low? That's only step 2 in a 3-part step to identifying whether or not we have a near or a longer term bottom, depending upon what chart you're using. Now, what we could be doing here, I'll illustrate it for you. And I don't think that this is going to hold up. It may in the end. But what we could be doing here is putting in a higher low. We don't know that yet. We don't know this to be fact yet. Now, I mentioned earlier that we couldn't get all excited about shorting this market because there was one thing, one component that was missing. There was no volume. Here's the moving average in red. It'll be the same on all these charts. Here's your volume bar. The indicators are okay. They're not great. They're okay. So nothing is screaming at me here, right now, on a daily time frame, I got to go shorting this market. Now, if we go to a weekly time frame, back to the weekly time frame, and we start breaking down below that low there at around, let's call it 1370, 1365, you got to get short the market. Simple as that. It's at that point I know I am wrong, and we got to get out of the way. Another way I'll know I'm wrong is if the yield curve and the 10-year yield begin to break out above prior highs. Then you're going to see the stock market in free fall. The Dow Jones, much like the transports, it's flashing a bearish key reversal bar. We have given up, maybe, we have one trading day left to go. We have given up support at around 32,600. And if we close down below it, that's a breakout point failure on the Dow Jones Industrial Average. And when you take a look at your stochastics, they're trying to break out, depending on where you put your line. If you connect the most recent lower low, they're trying to break out. But if you connect it with the most recent higher high, you still have more room to go to the upside, but you're going to be testing resistance. So let's stay conservative on where we place our Stokes. Volume on the week, horrible. There's no real serious down volume here. There's just a buyer's strike. There are no buyers. CPI has everybody scared. Daily view. So we're in a downtrend channel. In all probability, this is where we're going. 32,102, maybe to 32,000. And we'll see whether or not that becomes the new higher low. Or do we just proceed to break down, which is entirely possible. The S&P 500 weekly view. Sorry, folks, I got dry eye. Now, you can look at this in a couple of ways. This to me, as a contrarian, believe it or not, is a bullish chart. Let me explain. It all has to do with one thing. One trading day left to go. And the reason why I view it as bullish is this. Even though we're down 2.22%, play that number. What we're doing is we're retesting the breakout point of which, or from which, we broke out of 3 weeks ago. Right? The week of May the 23rd. We held it last week. This week, now we're retesting the breakout point. Now, if we rally and we close back above 409, 410 per share by the end of business tomorrow, all is right with the world. It's good. Get ready for a rally. If we do not, well, we got problems, because then we have a breakout point failure, also known as a bull trap. And a lot of people will have been caught up in it. So you're going to see some selling. So watch tomorrow. I started this commentary out by saying that tomorrow was the most one trading day left to go I've ever spoken about. So watch it tomorrow. Very, very critical as to where this market goes in the coming weeks, literally based upon one trading day. Now, volume. I keep coming back to this. Volume matters, folks. Who is selling? Is this JP Morgan? Is this Goldman Sachs? No, it's not. These are shorts covering. Excuse me. These are shorts leaning into new trades. These are retail buyers out there and some hedge funds trading. That's it. You haven't seen a lot of net accumulation by hedge or mutual funds of late, but you certainly haven't seen in the past couple of weeks a lot of selling either. Daily view. Obviously, a horrible chart. Fell out of bed today. Volume did rise, but still well below average. So is this our higher low? Do we trade below this mark tomorrow only to rally back to close above it? If we do, then we have a higher low. If we do not close above this mark tomorrow, we have problems. We have problems. And we will be looking to short the market. The trip Qs. Similar to the S&P 500, very light down volume. MACD is very, very long in the tooth here. So personally, I get the feeling that what's going on here is that they're forcing this market lower to get that, to test it. It's a test of the market. Do we put in that higher low? And do we put in, subsequent to that, higher highs? They're feeling it out right now. If we have technical breakdowns on a weekly time frame, expect selling pressure to rise dramatically. Qs, the RSI is very weak. Stokes are very weak. They're not very weak. They're rolling over. Volume did rise above trend. I've been documenting the decline in volume. So it did rise today above average. That is a bit of a concern, but still, we need to keep in mind relative to the moving average in red, how did we do? Not much. The financials. Traditionally a sector that does very well in a rising interest rate environment. Not lately. Bearish Q reversal bar on the week. Down volume, extremely light. MACD histogram looks like it wants to go positive. Daily chart. The MACD is a lagging indicator, folks. So take it with a grain of salt. All right, so we rallied off the lows. Are we going to put in a higher low? Simple as that. Volume rose, but still well below the moving average. How much time do we have here? 6. Wow, I got to get to the charts. Technology, I'm going to blow through these. Bearish key reversal bar on the week. Volume, horrible. Horrible. Daily chart. Breakdown. They're going to probe for a higher low. Simple as that. Semis. Horrible. Price action. But volume, not bad. Daily view. Bearish key reversal bar on the day. They tried to rally it. No bueno. Horrible volume. Biotechs. Bearish reversal week. But they did break out on Stokes. I still like the biotechs. Bad day today. I still like the biotechs. Here's your W formation, higher lows on Stokes. I'm not counting this out yet. Yes, we definitely have a breakout point failure. But I still like the biotechs. Energy. Think about this. We are off the highs of the week. And this volume to the upside has been very, very light on energy. Daily view. Oops, wrong chart. Since we're on this chart, look at the trucking index. I accidentally clicked on this chart. I didn't mean to go to it. But this is the trucking index, Dow Jones trucking index. It peaked out back in technically January of this year. So what is this chart implying? What is it telling us? Are trucking prices probably going up higher, or are they moderating a bit? My guess is that they're moderating a bit. Daily chart of the, wrong chart again. All right, so the energy sector fell out of bed today. How much were we down? 2.21%, volume light. Consumer staples hammered this week, down 2%, very light volume. Let's blow through these. Energy. I'm sorry, folks. I'm tired. Discretionary names. Bearish key reversal bar. Resistance clearly above. Volume horrible. Let's go to the daily chart here. They had a good day yesterday. And what I mean by a good day, they were down, but they had broken out on the 7th, and they held the breakout yesterday, but they gave it back today. So too bad. But look at this volume. Does this look like panic? Bitcoin. Bitcoin trades as a risk asset. But Bitcoin is up on the week by a 0.5 percentage point. Daily view. This is a live chart. We're back down below 30,000. We're right there. We're still holding on to 30,000. Emerging markets. Avoid this right now until the dollar weakens up. I like emerging markets, just not now. Gold. Everybody's favorite. Update it. We are up on the week, folks. We are consolidating very nicely. And if you're wondering where we're at on a weekly chart, a monthly chart, monthly time frame, we are up, and we are hooking up off of a critical support level. Here's another view. We're up on the month. Next resistance level, 19,000 on gold. What would be the catalyst to send gold up higher? Would it be that inflation, the CPI has to come in hotter than expected tomorrow? No. The reason why it won't do that is because the dollar will go up. If the dollar goes up, gold goes nowhere, if not down. Gold miners will go down, silver miners will go down. If the CPI report comes in less hot than what was expected, pressure comes off the Fed. Their demand destruction is working. What does that mean? Bond yields come in, equities rally, dollar comes in, gold goes up, gold mining stocks go up. That's why I added to our gold mining position today. Speculative play. We only added not just a call option. We opened up a bull spread. We opened up an in the money option and simultaneously sold an out of the money option to put a hedge on it. Just in case we're wrong in the short term, we have a little bit of an insurance policy. So we have insurance on that trade. So gold daily chart. We were down on the day, but look at the consolidation here. Nice consolidation at around 1850 per share, per ounce. Sorry about that. Down volume, very light today. We'll take it. Damn fly. I'm just trying to get that son of a bitch all day long. Silver. Somebody asked about silver earlier. Silver's not looking all that great. Down on the week, but remember, this is so volatile. So with silver, you got to take it with a grain of salt. This thing could close up tomorrow, for all we know, on the week. And that's it, folks. Let's go to some comments. Do you think I'm wrong, right? Where do you disagree? David, yeah, Bitcoin's looking good. I'm dollar cost averaging in very small amount. And McNeil, hey, how about, can you take a look at HES? I'm short XOM. So you want me to look at HES because of, is that Hess? Yeah, we'll take a look at it. Rick Roofing, Baba puts entries from Wednesday Pop, paid wealth. Yeah, they did. I know a bunch of guys that were hot and heavy into the Chinese stocks. I did not go into them. I don't even look at them. And thank God I didn't. Thoughts on the Fed pivoting on 615? Depends upon it depends upon what pivot you mean. If the CPI report comes in less worse than is expected, and the pressure comes off of them, and they do not have to hike rates as aggressively, they will not. But I can't see them. See, they're not doing much right now except for talking. And if it's causing demand destruction, them bringing down inflation, we'll know tomorrow whether or not that's true. But according to last month's report, inflation came down. It rose less worse than the prior read. So if their jawboning of inflation is working, I don't expect them to change much, because why change what appears to be working? So if you want to elaborate more on that pivot and what you mean by that, I've heard of it. I'm not exactly sure what the rhetoric behind it means, though. Hello, Bob. Ships got crushed. Yeah, I saw that. I think that was out of a JP Morgan note, no? I know. I looked at Zim the other day. It looked like we were breaking out. I think I even tweeted about it. And it had the legs cut out. The entire sector had the legs cut out from underneath them. We'll take a look at Zim. If I don't like the way charts look, I just change the time frame. Madman. ES and NQ major trend line rolled over big today. Yep. More bear country in the short term. Could be. POTUS stumbled upstairs. Yeah, again. I have a lot of respect for elders, and I really try to. I feel bad. I had my father-in-law passed away with Alzheimer's. Um, I've known people, other families. I try. I don't want to laugh at that stuff, but I can't stand this son of a bitch. He takes any empathy I have for him, and he turns it into. I despise the guy. Despise the guy. Someone gets. Allegedly he's getting baby's blood pumped into him. Adrenochrome. BOXD announced addition to the Russell 2000, and yet BOXD has been crushed in high volume. Any opinion? Yeah, a lot of times, Pete, you'll get stocks that get added to an index. The announcement they'll go up once they get added. That doesn't make much of a difference. If no bear market rally tomorrow, do you think the SPY hits 30? It could. Yeah, it could. And especially if volume rises. If you see volume coming above average, then all bets are off. You got to short the market. USO. We actually already went over oil already, pal. How do transports factor in? Well, transports factor in a way, in a bullish way. And give me some room here, probably to hang myself, but give me some room here. So let's go back to the chart of the transports. So when you got the transports that are rolling over, what is that telling you? What is it? How do you interpret the transports rolling over and quite possibly breaking down? And when you go back to this other chart that I went over before, the trucking index, what do you read into this? Is there demand for goods to be transported, or is there demand destruction? So when you look at the chart of the Dow transports, I would imagine that the Federal Reserve has got to be looking at the transport saying, okay, demand is slowing here. At some point in time, we're going to have to signal that, it appears as though inflation is slowing down. What we're doing thus far, we're making progress. While we're not ready to stop our hiking of rates, we are flexible in how aggressively we hike them moving forward. All they need to do is tweak the verbiage and not do anything different from what they've been doing. And as long as the CPI rolls in lower and the trucking index, the transports roll in lower, as long as yields don't stay above 3%, you could see growth stocks move up higher. I'm not going to say they're going to go to all-time highs, but you won't see a major sell-off because now the Federal Reserve is changing their tune. And that could be the pivot that was referenced earlier. What do you think about triple wood chip? It's huge, huge. You got it down there, $2 trillion in options. It's going to be a huge, huge event next week. No doubt about it. I don't know what impact it's going to have, negative, positive. All I expect is a ton of volatility next week. Is the Dixie, is it looking like it will hit 115 by September, November? Answer your question. I put the wrong symbol in. I'm so used to using Thinkorswim. All right. Do I think it's going up to 115? No, I do not think it's going up there. I think we've seen the top in the dollar. And as I mentioned earlier, the reason why is because now you have the ECB talking about raising interest rates. Now all of a sudden, the euro becomes competitive. Not that the euro had a great day today at all, but it has been strong of late. And this is only one trading day. Volume was heavy though. So I think that the competition from the euro is going to, remember, the euro makes up 55% of the dollar Dixie basket. So it's a formidable opponent versus the US dollar. And the second largest component after the euro is the yen. And that is very oversold again. Man, what a basket case. And this is due for a pop. 70 is resistance. Once the yen finds a short-term bottom, looks like it's going down lower in the longer term. Once they bottom out and the euro possibly puts in a higher low, expect them to go up, dollar to go down, especially when the Federal Reserve starts backing off of their rhetoric. All right. David, what the old motto, Bob? When the VIX, that's right. When the VIX is high, you got to buy. But I'd be looking for a VIX over 40. I've been saying that I don't believe that we've seen longer term the lows yet in the market because we haven't had that capitulation blow off top on the VIX yet. So uh, I agree that once we get up into the 40s, we got to start looking for opportunities to the long side for an intermediate term rally. Yoga Mac, dang, I'm sorry. No worries, brother. Yeah, yeah, yeah. So when I hear that, while I believe it for my own reasons, I think that Jamie Dimon's all he's doing is jawboning the market lower. Sounds good, Yoga Mac. All right. Yes, Yoga Mac, smash the like button, please. We got a lot of comments tonight. Holy cow. Uh, Trish, Bob, send me a note after the show. You may have a hacker on your IG. Oh, really? This is the second time now. Okay, thank you. Would they ask you for money? Folks, I will never, ever IM you requesting any personal information, requesting money. Never, ever. If you're getting that this is my second time with a fake account. I guess I'm becoming popular. I guess you should be happy about it. But it's not me. It's a fake account. So never, ever. I believe you're serious, Trish. It's the second time it's happened to me. I reported them the last time. It's probably a new set of hackers. What did they ask you for out of curiosity? Or are they trying to? What they do first is say hi. They lure you in, make you comfortable, try to have a conversation, and then they hit you for money. Energy down. Yep. I figured it out, Bob's. Bob's got the best cadence when going over charts. Thank you for that. Considering I have very little in terms of a plan when I go into the show. During the show, really, 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 really interesting. Okay. Thanks, Trish. I'll reach out to you later on. Okay. All right. Let's do some chart requests. It's 7:01 already. I can't go into the members area to find chart requests, so my apologies to members because the website is down. I'm going to have to blow through these because I am late. Tesla. I have a position here. This is a weekly chart. Options are expiring tomorrow on me, and we are testing the lower band of support on the month. This is a weekly. Now, this is now a weekly chart. Sorry, I went out of sequence there. We're holding the lows of the week. We're off the lows. I'm not ready to sell this. I'm not ready to buy this. I would wait. I would wait for the breakout above the highs of the week, which was at 766.45. Maybe I wouldn't wait that long. Let's go to the daily chart. Yeah, I wouldn't wait to that long. If they break it above, actually, if they pull it back, I hope they don't, to this lower band of support, I'd be a buyer. And or if they break it out, I would buy or add. Where I long right now, would I sell? No, no. HES, yep, Hess Corp. Weekly chart, reversal week so far, light down volume. It's not a bad chart, but here's why. On a daily time frame, yesterday, what we did, here's the value of the automated trend lines. Folks, if you don't have TrendSpider, 35% discount code below, automated technical analysis. We hit the upper band of resistance. We pulled back. Does that mean the stock is done going up? No. Energy sector did pull back today. Keep that in mind. It was a pretty serious pullback, consistent with what we saw here on Hess. So I would not be a buyer. I'd be looking to buy down here, 123.50 in that neighborhood. Tight stop right below. If that fails, we're coming down here to this lower band of support at around 121 per share. For one of my favorites, Trader Isaac, Zim. Zim is in trouble. Let's go to the weekly chart first. It's in a lot of trouble. So what we're looking at here is remember the transports, remember the trucking charts. They're all breaking down. So when you look at Zim, Zim has been strong. Why? Because he had bottleneck constraints, whatnot. We've been, however, in a downtrend channel, right? So we put in a high back here in March of 2022. We hit the upper band of resistance the last time, the week of May the 23rd. Rejection. We rallied back. We hit it again this week. What happened? Rejection. Now we're breaking down to new lower lows. We could trade all the way back down to this lower band of support here. Does that happen? We don't know. But at a bare minimum, we're coming down to 53. Is it 53? Yeah, 53 bucks a share. Watch for that to bounce at that price point. If we close down below 52.75, avoid. We're going lower. Okay. DVN for Yoga Mac. This is going to be the same deal here. Energy. Weekly chart. We were down last week. Doji star formation this week. My guess is that on the week so far, we have a blue doji. Not quite. No, we don't. We still have a green doji. According to the raindrop chart, still a fairly bullish chart, but I'd be wary of this. You're seeing a little bit of indecision. Doesn't mean we can't break out. Volume is on par with last week. Daily view. Oh, look out. Watch out here, folks. We are in the apex of a major, major ascending wedge formation. So this is either going to break out big, it's going to break down big very, very soon. So be very careful with this name. And with that, folks, thank you for joining in. Comments. What do you think, SPY? Are you done with the downward trend? No, not yet. No. Longer term, we have more damage to go. I just think that we have, in the short term, a little bit more upside to go here before we move down lower. No, we're not done with the downtrend. It's going to take months before that comes to an end. Folks, thanks for being here. I greatly appreciate you being here. Thank you for the engagement, Trisha. Thank you very much for the heads up. Again, I will never ask you for money or anything like that on Instagram or anything like that. So it ain't me. So check out the name where it comes from. They add a dot or a dash. Just it looks the same. They literally duplicate my entire account, and it looks exactly the same. I can't even tell the difference. Folks, great night. Be well. Have a profitable trading day tomorrow.